Imagine being able to generate income even while you sleep. That's the potential of real estate investment. It's a fascinating world where the buildings and land around us become more than just spaces, but opportunities for growth and financial freedom. We're going to delve into this world today, exploring different avenues you can take on this exciting journey. We'll talk about direct property ownership, where you can become the landlord. We'll also look into real estate investment trusts, or REITs, which allow you to invest in real estate without the need to directly own a property. And lastly, we'll explore the innovative world of crowdfunding platforms, where technology meets real estate, opening up new possibilities. So if you've ever looked at a skyscraper and wondered how you could get a piece of that pie, or if you're just curious about what real estate investing entails, stick around for an insightful journey into the world of real estate investment. Real estate investing in its simplest form involves buying property to generate income or profit. It's a bit like planting your own money tree. You nurture it with time and effort, and it can bear fruit in the form of rental income or profit upon sale. But it's not just about the potential earnings. Real estate investing also offers an opportunity to diversify your investment portfolio, stepping beyond the world of stocks and bonds. In addition, there's the allure of appreciation. Over time, the value of real estate often increases, meaning your initial investment could grow considerably. And let's not forget the power of leverage. Unlike many other forms of investing, real estate allows you to buy properties with a fraction of the cost up front, multiplying your potential returns. So how do you get a piece of the real estate pie? Well, there are several ways to invest in real estate, each with its own set of advantages and risks. One of the most common methods of real estate investing is direct property ownership. This is the classic image most of us conjure in our minds when we think about real estate investing. Buying a property, maybe a house or an apartment, renting it out, and then selling it for profit in the future. Direct property ownership is a hands-on approach to real estate investing. It entails purchasing a property outright and then managing that property. This might involve finding and interacting with tenants, maintaining the property, and dealing with any issues that arise. It's a method that provides a high level of control. You decide who rents your property, how much rent to charge, when to sell, and for how much. Now, this level of control can be a major advantage. It allows you to make decisions based on your personal circumstances and financial objectives. For example, you might choose to increase the rent to boost your income or sell the property if you need a lump sum of cash. It also gives you the opportunity to add value to the property, perhaps by renovating or upgrading certain features, which could increase its market value. However, with great power comes great responsibility. The management responsibilities that come with direct property ownership are not to be underestimated. It can be time-consuming and sometimes stressful, dealing with property maintenance, tenant disputes, or the legal aspects of property ownership. Moreover, there are also financial risks involved. The property market can fluctuate, and there's no guarantee that your property will increase in value. You may also face periods where the property is vacant and not earning rental income. Plus, buying a property requires a significant upfront investment, so it's not an option for everyone. So, how can you get started with direct property ownership? Well, the first step is to research. Learn about the property market in the area you're interested in, understand the responsibilities and costs associated with owning a property, and carefully consider how it fits into your overall financial plan. Next, you'll need to secure financing. This could be through savings, a loan, or a mortgage. Remember, it's important to ensure that any loan repayments are affordable and within your budget. Finally, once you've found a property you're interested in, you'll need to negotiate the purchase and close the deal. This can be a complex process, and it's often beneficial to work with a real estate agent or a lawyer to ensure everything goes smoothly. But what if you want to invest in real estate without the hassle of managing a property? Well, don't worry, there are other options available which we'll explore in the next part of this series. Stay tuned. Enter real estate investment trusts, or REITs for short. Picture a company that owns or finances income-generating real estate. Now imagine you can buy shares in this company, just like you would with Apple or Amazon. That's what a REIT is. It's a way for you, the investor, to profit from real estate without having to buy a property yourself. Now, how do REITs operate? Well, they're legally obliged to distribute at least 90% of their taxable income to shareholders. This means that when the REIT makes money, you make money in the form of dividends. And these dividends can be quite attractive, often higher than what you would get from bonds or other types of stocks. One of the main advantages of REITs is liquidity. With direct property ownership, if you need to sell your property, it can take months or even years. But with a REIT, you can sell your shares at any time, just like regular stocks. This means that if you need to access your money quickly, REITs have got you covered. Another advantage is diversification. Most REITs own a variety of properties, spanning different sectors and geographical areas. So by investing in a REIT, you're effectively investing in dozens, even hundreds of different properties. This can help to spread your risk, which is always a good thing in the world of investing. But it's not all rainbows and sunshine with REITs. One potential downside is the lack of control. When you invest in a REIT, you're putting your trust in the management team to make the right decisions. You can't control what properties they buy or sell, or how they manage those properties. So if they make a bad decision, your investment could suffer. Another potential downside is the volatility. Because REITs are traded on the stock market, their price can fluctuate quite a bit. This means that if the stock market has a bad day, your REIT investment could take a hit, even if the underlying properties are doing just fine. In summary, REITs offer a way to invest in real estate that's relatively hassle-free and offers some key advantages, like liquidity and diversification. But there are also potential downsides to consider, like volatility and a lack of control. As with any investment, it's important to do your research and understand what you're getting into. But there's another way to invest in real estate that's been gaining in popularity. Welcome to the world of real estate crowdfunding platforms. It's like stepping into a bustling global marketplace where you can pick and choose from a variety of real estate investment opportunities. Now, what is real estate crowdfunding, you ask? Well, it's a method of raising capital for real estate projects by pooling funds from multiple investors. It's like throwing your hat into the ring with a bunch of other investors, and together you fund a real estate project. Now, let's dive into the different platforms. First up, we have peer-to-peer platforms. These act as intermediaries between you, the investor, and the real estate developers or owners. They provide a marketplace where you can browse through different investment opportunities, much like scrolling through a digital catalog of properties. Then there are real estate investment trusts or REITs crowdfunding platforms. These platforms allow multiple investors to pool their funds to invest in a portfolio of properties managed by a professional real estate company. It's like buying a slice of a real estate pie, where each slice represents a share in a portfolio of properties. Lastly, we have blockchain-based platforms. They use blockchain technology to facilitate real estate transactions, allowing for increased transparency and potentially lower transaction fees. It's like a futuristic twist to the traditional crowdfunding model. Now let's talk about the potential rewards. The most obvious one is the potential for high returns. By investing in the right project at the right time, you could reap substantial financial rewards. Additionally, crowdfunding platforms offer diversification. You can spread your investments across multiple properties or projects, reducing the risk associated with investing in just one property. However, it's not all sunshine and rainbows. There are risks involved. Real estate crowdfunding is still relatively new and the industry is evolving. Regulatory changes could impact your investment. Also, like any investment, there's the risk of loss. Real estate markets can be volatile, and there's no guarantee that a project will be successful. Moreover, some platforms require a significant minimum investment, which might be a barrier for some investors. And let's not forget the illiquidity. Unlike stocks and bonds, which you can sell almost immediately, your money could be tied up in a real estate project for several years. In conclusion, real estate crowdfunding platforms offer a unique way to invest in the property market. They provide access to a wide range of opportunities, from residential properties to commercial projects. However, as with any investment, it's essential to do your research and understand the risks involved. Now that you know the different ways to invest in real estate, how do you get started? Remember, the key to successful investing is knowledge. Start by educating yourself about the different platforms, their fee structures, and the types of projects they offer. And always do your due diligence before investing. Getting started with real estate investing might seem daunting, but it doesn't have to be. The first step is to set clear and realistic financial goals. Know what you aim to achieve, be it capital growth, rental income, or a mix of both. Next, familiarize yourself with the different investment methods. Whether it's direct property ownership, real estate investment trusts, REITs, or crowdfunding platforms, each has its unique advantages and potential pitfalls. From there, consider seeking professional advice. Financial advisors, real estate brokers, and seasoned investors can provide valuable insights and guidance. They can help you navigate the complex world of real estate, ensuring you make informed decisions. Lastly, never stop learning. There are countless resources available, from books and online courses to podcasts and seminars. These can further deepen your understanding and keep you updated on market trends. Remember, every investment journey begins with a single step. We've covered a lot of ground today, from direct property ownership to REITs and crowdfunding platforms. We've delved into the world of real estate investing, exploring the potential benefits and the inherent risks. We've discussed how you can become a direct property owner, the ins and outs of real estate investment trusts, and the innovative approach of crowdfunding platforms. We've also provided you with some tips on how to get started and resources for further education. Remember, every investment journey starts with a single step, but it should be a calculated one. It's essential to conduct further research and consult with trusted financial advisors before making any investment decisions. Don't rush into anything. Take your time to understand and evaluate the opportunities. Investing can be a rewarding experience, but it's not without its challenges. However, with knowledge, patience, and a bit of courage, you can navigate the real estate investment landscape with confidence. So, are you ready to take your first step into real estate investing? Before you go, we have one last thing to ask. We're about to wrap up our deep dive into the world of real estate investing. It's been a journey from understanding what real estate investing is to exploring the different ways you can get involved. We've discussed everything from the traditional route of direct property ownership to the modern marvel of real estate crowdfunding platforms. And let's not forget the powerful player in the field, real estate investment trusts, or REITs. Our aim has been to give you a solid foundation of knowledge to help you start your own journey into real estate investing. We've shared tips, insights, and valuable information, but remember, this is just the beginning. The world of real estate investing is vast and constantly evolving, so there's always more to learn. But don't worry, you're not alone in this journey. We're here to guide you, to provide you with the knowledge and resources you need. And that's why we're asking this one last thing. If you found this video helpful, if it clarified things for you, or even sparked your interest in real estate investing, then please give us a thumbs up. It's a small gesture, but it means a lot to us. It helps us reach more people like you, individuals keen on expanding their financial horizons. And while you're at it, why not hit the subscribe button as well? By subscribing, you'll be the first to know when we release new videos. We're committed to continually providing you with valuable content to help you stay informed and updated in the world of real estate investing. But our relationship doesn't have to stop there. We're interested in your thoughts, your doubts, your questions. So feel free to drop a comment below. Maybe you're wondering about a specific aspect of REITs, or perhaps you're curious about the risks involved in real estate crowdfunding. Whatever it is, don't hesitate to ask. We're here to help, and your questions might just inspire our next video. And don't forget, the journey to financial freedom begins with knowledge. The more you know, the better equipped you'll be to make informed decisions. So keep learning, keep asking questions, and keep striving towards your financial goals. Remember, the world of real estate investing is at your fingertips. All you need to do is take the first step.